following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. A little bit of education, a little bit of analysis, a dash of insight, and a small serving, a modicum, if you will, of entertainment. My name is Mark Longo from theoptionsinsider.com, as well as the Options Insider Radio Network. And of course, I encourage all of our listeners out there to play the home game and follow along with all of the unusual activity alerts and the news from the options market and everything else that we're discussing on the show today. You can find just about all of it over there at theoptionsinsider.com. Of course, you can also fire off your questions and comments to join us here on the Option Block All-Star panel. Perhaps we'll have some time to get to some of those in the mail block later today. And of course, I'm not alone on the old Options Insider All-Star panel, far from it. In fact, that would make for quite a boring panel if it was just me. No, I am joined by our usual cast of colorful characters. Try saying that 5 times fast. Cast of colorful characters. First off, I am joined by the Viceroy of Options Express, none other than Alex Jacobson himself. Alex, welcome back to the program, sir.
Hey, Mark. Good to be here, and I know I'm going to date us, but Yahoo just posted earnings, and it's up about $1. Looks like it beat. That's coming across the tape right as we're recording.
Perfect. Some news and analysis to parse as we're diving into today's activity, or perhaps lack thereof. But Alex, I hear they're changing over your business cards as we speak to have Viceroy on them.
Yeah, it's actually Grand Viceroy, but I mean, I don't want to split hairs.
I'm sorry. I didn't mean to underserve you, sir. Well, I'll be sure to make a note of that for future episodes. Grand Viceroy, Alex Jacobson. I like that. Also joining us is the man from the mountains himself, none other than Uncle Mike Tosaw, beaming in all the way from the lovely St. Charles offices of RCM. Uncle Mike, welcome back to the show, sir.
Always excited to be here. And, one of these days, can I be a great uncle? I want to get promoted.
That just makes you sound older then. I don't know. If you want to be great uncle, that's fine.
I actually am a great uncle. I do have a great nephew and a great niece. It's no joke.
How is that possible?
Yeah, I was scratching my head on that one.
My wife was an accident 17 years later.
One of those.
So can I be great Uncle Mike then?
Okay.
I am a certified great uncle.
I can look into
life.
that for future episodes. I like that.
I don't know. Can you pull a quarter out of your ear and... can you do like...
I can wear my pants up to my chest. I can
pull your finger and then make a fart?
Oh, I can do all of it.
All right, well then, yes, you may.
All right.
And listeners, speaking of horrible accidents, we are also joined, last but not least, by good old Mark Sebastian from OptionPit.com. Mr. Sebastian, welcome back to the program, sir.
How many times do I have to tell you that I am in fact the least.
That's true.
You know,
I'm trying to elevate you a bit here on the old program.
You keep trying to downgrade me. Least is really, it's really good to be least, right?
Not in my perception, but if you prefer to be least, I can certainly arrange for that to be said going.
What do you mean, not in your perception?
It says in the Bible, the last shall be first.
That's
so.
true.
There you go.
There you go. So for the hardcore religious amongst us, I'm sure that resonates with them. But it's kind of sad to be on Skype. I miss all of your lovely faces in the live room with me like we had last week.
Yeah, well, the face I missed most is Mike Tosaw.
Yes, he unfortunately couldn't make it. But listeners, if you didn't have a chance to listen to our live show last week, we had just about everyone live in person except for Uncle Mike Tosaw. He's too big time to join us live.
Uncle Mike Tosaw.
Great Uncle Mike Tosaw. He had to beam in via the magic of Skype. So we had a mostly live show. All right, and with the team assembled, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, a portion of the program where we break down some of the day's action, and it wasn't too much action to speak of. Most of the major indices closing fractionally up or down on the day. S&P clinging ever so tenaciously to that 1,500 level, closing down about 0.2% on the day today, right at that 1,500 level. Dow closing down about the same level, about the same percentage, I should say. NASDAQ closing up a little bit, getting a little bit of boost from the tech sector. And, of course, VIX cash closing to the upside, up about 0.7 points to 13.57 on the day. So a lot of stuff to parse in and around those numbers. Perhaps we'll start in VIX land. Mr. Sebastian, anything catch your eye about today's VIX activity?
Yeah, I was shocked that we held these levels, to be honest.
These VIX levels or these S&P levels?
Yeah, I mean with the VIX levels. I mean with the S&P off 2, the VIX, yes, we got some weekend effect, but we were rallying on Friday. I mean, give me an argument where we have volatility of under 4%. And the VIX is trading at 4x. It doesn't really make a lot of sense to me right here. And I'm not, I am a seller of this VIX. I really am. I'm just kind of shocked that it's managed to hold itself this way.
That's true. There doesn't seem to be a lot really underpinning these vol levels here. Not a lot of.
We're at like the lowest realized volatility in a year. And maybe probably 2 years.
I'll have to dive into some of the paper flow out there in SPX. Maybe we have some size premium buying that's keeping a VIX afloat.
It was just weekend effect that didn't decay and then nobody decayed. Nobody said there weren't like big sellers. I think that's kind of the big thing I'm looking at.
Which is ironic for VIX because we've noticed over the past few months people have really not missed any opportunity really to capture any of that differential between realized versus implied. They've taken that opportunity, and lately that differential is if he's even growing, and they're not taking the opportunity to put that trade on, which is kind of interesting in and of itself.
Yeah, I agreed. And it's not like there was a lot of paper.
No, light day. Thin day.
I'm looking at volume today, and not a lot of crazy things running things up. I mean, I can't find a single real important order that would affect VIX that was over 1,500 contracts in SPX today. I think it was just a lack of anybody selling or buying, and the weekend just stayed. It just was. So
one of those days when the market maker is apparently reluctant to take that weekend out, or then reluctant to keep taking it, I suppose you could say. Just an interesting day all around. Uncle Mike, what caught your eye aside from a little bit of upside movement in that fruit company?
A little bit of that. Not much, honestly. It is one of those days we always used to call this government-sponsored time decay, and that it doesn't quite happen the way you expect it to.
Those were the days.
They were.
Government-sponsored time decay.
How is it government-sponsored?
I've often referred to it as non-linear, but government-sponsored.
Yeah, well, how does the government sponsor no decay coming out for some odd reason?
Well, it's like you expect something to happen, the government promises something to happen, and so when you expect the government to do something, sometimes it doesn't happen exactly the way you want it to. So when the decay doesn't happen in the way with which you're expecting it to, it must be government sponsored.
Interesting. I wouldn't mind a government sponsoring some free decay weekends. It might be a good use of our taxpayer dollars.
I'd be okay with that, actually.
I think everyone here in the deeply cynical libertarian option block can get behind that use of government funds. No decay weekend for all involved. I would love to see that going up on the broad tape, see how the market reacted to that. I like that idea, Uncle Mike. I think you've started a groundswell of movement here.
Let's start a political movement.
Anything else catching your eye? GLD, of course, Ford reporting before the bell tomorrow. Anything going on out in Fordland in the KYO/RCM portfolios?
Yeah, looking at it, it was actually down a little bit pre-market today. It's definitely up on the watch list today. If we get decline in Ford, I'm definitely looking to sell some puts on it and get back into it. That's for sure.
We got some listener questions coming in the mail block later. Some people asking some specific questions about Ford, so perhaps we'll have a chance to parse those later on as well. Alex, anything else catch your eye in today's action?
Ford and Facebook were the active names here today, and obviously both have earnings in the next couple days. So a lot of stuff going on in the weeklies, in the Facebook weeklies, and premiums are, I would say, generous there. Stock closing mid 32s, and 35s going on Friday we're trading most of the day in the 75 cent, 80 range. So, but I think that sort of talks about what Mark and Mike were talking about. It's just a quiet week, and the opportunities are few. So Facebook and Ford were dominating today.
Well, you've got some opportunity in the, like we talked about on Friday. I think you've got some opportunity in the equities, but maybe not in some of the other places you might expect. Certainly not any of the fund indexes. It's going to be a boring period of time. I was looking at the only reason I can think that we would have this kind of rally. Are people actually concerned about non-farms? That's my question.
Yeah, it is somewhat of a head scratcher exactly what is behind that VIX rally, or just the fact that VIX could maintain these levels here with all these other things going on. That could be, but you're right. There's no paper flow really to offset or to generate this type of activity. Just some weird stuff.
I don't know.
Weird stuff afoot in the options market. Alex, you mentioned Yahoo before. Just pulling it up, they had earnings coming out after the bell. Stock up a wee bit, up about 80 or so cents. So not even up.
Straddle was predicting $1.
Yeah, the straddle was the weekly straddle was about $1.20 or so. So a wee bit south of what people were predicting. So who knows? There might be a little bit of movement left.
Say something else, and it could keep going.
Yeah, exactly. These things always tend to drift, but a wee bit of upside. It looks like it's coming off a little bit now, but a wee bit of upside going on with Yahoo. We'll keep an eye on it and report back in toward the end of the show to see what's going on in Yahoo land. I can't look at Yahoo anymore without thinking back to the late 90s heady days when it was 400 or some absurd level like that.
I know.
People were fighting fist fights to get out into those pits out on the SIBO, and it was just insane time in equity land. Of course, you can say the same for AOL and all the others that were up at these absurd levels, but every time I look at Yahoo, I have a little bit of that painful wince of like, remember
AOL
when
kind of like an Apple of the 90s, right?
Oh, they were very much so. They were the dominant player before Google was still becoming kind of cutting their teeth in the late 90s. Everyone still used Yahoo.
Before the internet was just the internet. When you needed to actually dial in, you need somebody to, before there was this concept of just constant internet. That was when AOL was really at its best, right?
Oh, AOL, yes. AOL was very much the internet before the internet became big. It was the walled garden for your grandmother.
Well, I remember the biggest thing was not having a web address, it was having an AOL keyword.
And now you can just tell a neophyte from someone who usually has an AOL address. And that's been the case for a long time, especially now. If you still maintain that AOL subscription for some way, shape, or form, it's pretty easy to tell that you probably don't spend a lot of time surfing ye old web.
What is I'll bet you they have a bigger part of revenue from monthly subscribers than you and I think.
I think they're very much in the content game now. They obviously bought Ariana Huffington's outlet recently. They have things like Engadget. They have a lot of actual big content sites now in the AOL empire. So they do a lot from content from display. What percentage still comes from people paying that monthly fee? God, I can't imagine. I don't even know what the AOL monthly fee is anymore. How much do you pay to get that AOL address?
I don't know, but I'll bet you it is bigger than you and I think.
I do remember reading a couple of years ago, or maybe even more recently than that, one of the women who was in charge of that marketing campaign. Remember, you used to see those AOL CDs literally everywhere, stacked up in the supermarket, and someone gave that woman a hard time. How could that possibly have worked out for you that you printed so many of those? She said actually the net CPA on that deal worked out to be pretty favorable, worked out pretty well. So despite the fact you could have papered your room with those CDs, they still made money on that deal, which is interesting. Alex, you were going to say something.
Yeah, the model is all content now. Actually, having the address is free on AOL.
There you go, Alex, setting us straight yet again. All right, thank you for that, Alex, and that's going to do it for the trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time once again for the Odd Block. This is, of course, a portion of the program where we dive deep into the interesting, bizarre, and unusual options content that was lighting up the old tape today. And we're going to start things off with Western Union, ticker symbol WU. They closed today up about 3.5% to about $14 on the day, and this was, of course, a fairly sizable activity day for Western Union. This is not exactly the most active of names. It's been averaging about 3,500 contracts a day of late. Today, doing nearly 32,000 contracts. So a lot of paper lighting up the old tape today in WU. Now, Mr. Sebastian, I know your counterpart, your partner in crime, good old Andrew, wrote this one up for theoptionsinsider.com. Would you like to parse this for our listeners?
Yeah, it looks like it was a pretty big trade on the Feb 13 and the 14s. Kind of an interesting one, huh?
Yeah, it looks like it was definitely some size going up here and downside Feb. Well, not downside at the money for the 14s and downsides on the 13s.
Yeah, big put buyer, and then it looked like he sold for looks like a big back spread. So I'm wondering whether this is like a long hedge, some guy trying to do it cheaply, because it looks like the guy sold the 14s and bought umpteen kerbillion of the 13s against it. So I'm wondering whether there's a long position that wanted to hedge for a credit.
It's not a bad way to do that. This, of course, being the inverse of the type of trade we usually see, the 1x2, usually using 2 to finance the 1, and instead they're doing the back spread, doing essentially the opposite of that here, selling the 14s and buying, looks like about 2 plus of the 13s. Some sizable activity going up here on these two strikes. Of course, there's about 7,000 open on the 14 puts, so some of this, I suppose, could have been a close and then a roll and rolling down, doubling down, but that's really the only strike that has any sort of substantial open interest on the put side is the Feb 14s. So I suppose it could be some of the open interest at play there, but for the most part, it seems to be a back spread with perhaps the intention of protecting some sizable underlying position. Nothing on the near-term horizon coming up. Earnings are not for a couple of weeks, so
on the 12th, maybe it's kind of a looking to set something up ahead of earnings, or they're worried about a pre-announcement.
The stock is rallying a bit. It's up at some pretty high levels here, so maybe he likes this level, taking his opportunity to put these 13s on for a wee bit cheaper. Interesting stuff either way going on here in Western Union. Don't talk about good old WU as much in the old odd block.
No, well, ever since the Pony Express went out, Western Union is not quite as important as it used to be.
Are you saying you don't wire money all across the country anymore to your great aunt Matilda out there in Iowa?
No, although I got a call in the middle of the night from my brother in Canada asking me to wire him $5,000, so I did.
It seems to happen a lot there in the Sebastian family. Those late night calls from prison Send
Yes,
some money
exactly.
immediately. That's probably what keeps Western Union in business, really. The prison bailouts.
Well, and they really are like a almost more like a currency exchange than they are.
Yeah, very much so. You go there and get a money order and whatever else you need if you don't have a checking account.
And the amount of money they charge for that payment process
it's ungodly.
is incredible.
It's ungodly.
I know. So
You can't be
good margin.
You can't be too sad that they're going the way of the dodo, because it is just
No.
they talk about exploitive business models. That is certainly one. Of course, talking about a name that we feature quite a bit in the Odd Block, particularly last year when they went public, is of course Facebook. Good old FB closing up about 3% on the day to date, about 32.5. A pretty hot and heavy day out in good old FB, regardless of what Mr. Sebastian associates it with. It's been doing a lot of volume of late. Of course, earnings are approaching on the 30th, so there is a lot of paper leading into the earnings announcement. Usually doing about 250,000 contracts a day, doing over 600,000 today. So just a freaking ton, and that's a technical term, of paper going up here in good old FB today. Okay, we saw a pretty sizable block going up in Facebook of the weekly Feb 34
calls.
Yes, with a massive about 25,000. So a bit of noise in the overall Facebook
by
volume.
the end of the day, 63,000 actually.
Yes.
And another 55,000 on the weekly 36 calls.
So this is just some serious love here piling
well,
into Facebook.
the open interest on both was about. It looks like that. I'm looking here, and I'm wondering whether those were both closing trades. No, they're both added. They traded 83,000 yesterday, or on Friday, and another 55,000 today. So, big call buyer, and then on the 34 strike.
The 34 looks like closing. Yeah,
that was a close.
The open interest is identical, so that's pretty much looks like a close there.
Yeah, I think the 34s were a close, and maybe you rolled up to the 36s.
So someone rolling the dice on some short 34s, not liking how that's looking, rolling it up, giving himself a little extra breathing room going into earnings. Given the way the stock has been trending of late, can't say I blame them.
Is it possible that's a covered call that they're trying to roll up and keep the gains a little bit?
That's possible too, Uncle Mike. Speaking from the covered call side of the fence, I would expect you
also
to espouse.
I am because right now I like Facebook in the mid 20s. I shorted the 26 puts on it a while back for this week, and I think that the premium is very generous in Facebook right now, I think. But who knows, if Facebook's at 19 in a couple days, maybe it wasn't quite so generous.
Hard to believe we were just arguing about, I think it was the 19 puts, whether to short them or not, just a few months ago on the show. And here we are now, the stock nearly doubling in the subsequent couple of months. And now we're talking about rolling 34s up to the 38s. That's pretty crazy change of consensus on this name just in a few months.
Except for outright people who bought the day of the IPO and that's their only trade. I talked to a lot of people who are getting to break even in these numbers. So I think that's going to generate a lot of adjusting and a lot of different option plays. But I think there are a lot of people that had a 31, 32, 33 number, which they would have settled for when the stock was 19. And we're getting there now. There's a lot of Facebook and customer accounts. So you're going to see a lot of activity here in the next week. As Mike pointed out, huge premium in the weeklies. Yes, this is earnings week. So you're going to have earnings a day before weekly expiration. But some of the premium stuff that, 35's at 80 cents. People have got to be playing at those levels.
Yeah, and you're right, Alex. This is indeed, of course, we're hovering around levels that are pretty close to where it IPO'd. So if you've been holding on since that moment, I believe it got up to, 34 in that range or even higher. And if you've been holding on since IPO levels, actually I think higher, I'm thinking of the SIBO IPO, which got up to 34. So if you've been holding on since the IPO, then this is indeed a favorable time to start trading in and around this one here. Last up, on the old odd block, we have one of Andrew's favorites, good old Take-Two Interactive, ticker symbol TTWO. They closed today at $13.12, up about 2.5% on the day today. This is the name that doesn't really let up the tape, does about 1,000 contracts a day, doing over 10,000 today. Pretty much all of this paper, 9,300 of that 10,000 contracts, coming in some sizable upside trading here on these March 14s. Mr. Sebastian, I know this is one of Andrew's favorite names.
I know. Do they do Grand Theft Auto Take-Two?
They do.
Yeah, I think they do.
They're video game publishers. They publish a lot of these kind of names, and they publish Grand Theft Auto. Of course, that could be a reason why we're seeing so much upside activity. There is a new GTA looming on the horizon.
Oh, no.
That usually tends to boost a name like this. I can hear Mr. Sebastian being very excited. I think you're looking forward to rampaging through the streets and running over some pimps and hoes.
Yeah,
is that what you do in your off hours?
Yeah, that is just the most violent game you can imagine.
It gets up there.
I'm disappointed they're not making it for the Wii, which is the system I own.
Somehow Nintendo family friendly and Grand Theft Auto don't seem to go hand in hand. Maybe it's call me crazy. I don't know. But yeah, a lot of upside love here on these March 14s. Looks like about nearly 10,000 going up on open interest of just 400 contracts. So that could indeed, a lot of it going up mid-market, so we don't have an exact on whether these were lifted or hit. It looks like they were pretty much, the bulk of them were being bought for around 40 to 45 cents. Yeah, about 40 to 43 cents. A lot of love here on this upside. What do you think of March 14s here in Take Two, Mr. Sebastian?
You know, that is a lot of love, and the stock's had a rough go of it. Well, it's actually had a nice rally over the last 6 months, but has been as high as 17. So it's a good bet then it's just a bet on a big push with Grand Theft Auto, the Grand Theft Auto launch.
Yeah, it's just an interesting one. I'm not sure if I think the name's going to get that much love. I'll have to go back historically to see how much of a pot they got in previous GTA releases. I mean, this is a pretty broad publisher. They do a lot of names. GTA obviously being a big one, but still, we'll have to go back and look and see how much of a pop they've gotten off those kinds of events in the past. Of course, I think in general, we on the show, for the most part, take a dim view on just loading up on upside without doing anything else against it, perhaps doing a ratio, perhaps writing something else against it, perhaps doing a vertical, something along those lines to mitigate some of that paper flow. I know your counterpart there, Andrew, likes to get all of his juice for free if possible.
I know he does.
So this type of trade certainly probably would be deeply offensive to him. But still, a name he likes to play in, good old Take Two. And that's going to do it for the old odd block today. And now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the show where the Grand Viceroy takes the reins and my vocal cords get to take a rest. So, Mr. Grand Viceroy, Mr. Archduke, what is indeed catching your eye over in the land of Options Express today?
Go into the Idea Hub. Seen a lot of SPX PM ideas on there today. So, looking at condors, about $60 out of the money for the Marches, selling for about $1.50, $1.60 on a $10 condor. It's about a 16% return on risk. The Feb, same thing, about $40 out of the money. Feb's obviously a little sooner, so a little narrower in terms of price. The condors coming in $1.20 on a $10 condor. That's 12% return on risk. But it's interesting now that Apple has been bumped as the vol king, seeing a lot more SPX PM stuff, Qs, and Russell stuff, even though index vol is still relatively low. Another thing we've talked about a couple of times is the walk limit product. I was at lunch today with some of the marketing crew from Eurex, and I was walking them through walk limit, and they were kind of looking at me going, how do we get that for products on their exchange? Walk limit allows you in a spread, right now only in a spread, and that has to do with cancellation fees, but in a spread it allows you to enter a limit, enter the most you'd want to sell it for or buy it for, and then the least you'd want to sell it for or buy it for, and then walk limit automatically works the order, doesn't cost any more. As I say, it's only available in spreads. It's available in simple two-legged spreads, but it's also available in condors. Frees up a lot of time. I know quiet markets, not everybody is as time stressed, although I talk to customers all the time that have 7 or 8 screens open, searching for opportunities. Walk limit's a cool feature. As I say, when I talked about it today to the guys at Eurex, they were like, I want that product for my exchange. One thing the Eurex guys did mention is CFTC approved the Euro stock futures in the U.S. today. So that's an interesting development. But other than that, Facebook and Ford, relatively quiet day here.
I'm trying to think back, Alex. Has the Idea Hub really spat out many SPX PM ideas in the past? I think this is the first time I've heard of one of those. Not exactly a product that's lighting up the old tape these days.
Yeah, and I'm kind of surprised. Obviously, the premium in the PX should be a tad more than the straight SPX, and there's some ranking going on in the Idea Hub because one's PM, one's AM. But when I'm looking at the screen today, I don't have one SPX on here. I've got SPY on here, but I'm littered with PM. Put spreads, the Feb 1460, 1450. The algorithm is pretty straightforward. It treats everything the same, but it's got a ranking, and the PMs seem to be bumping the straight SPX out. Spiders are up here. Gold is up here. Russell, not a lot of premium coming out of the Russell, but PM is all over the front page. So the algorithm's kicking out PM.
Interesting. PM getting a little bit of love. Of course, perhaps now that it's going to be migrated back to the old hybrid system might make it a little easier for some people to trade this across the board. SPX PM getting a lot of fanfare last year, not getting a lot of commensurate customer love for a variety of reasons over the past year or so since it's been unveiled. Maybe this move back to the CBOE mothership might help spur that product and get it some new life. All right, thank you for that, Alex. That's going to do it for the Xpress Block, and now we're going to keep on rolling right into the Strategy Block.
The Strategy Block.
Once again, given that music, I have a hard time banishing the image of Uncle Mike in a smoking jacket, rubbing his chin and going, as this segment starts. And Uncle Mike, my little birdie network, has been active as usual, and they've been chirping my ear all day. Something about SPX or SPY puts. I couldn't get them to nail down one or the other. Something to do with S&P and some downside puts. Are my birdies worth it? Should they get their bird feed for today?
Well, it's about selling puts, so I don't know if it's necessarily so they're there. They're in the right neighborhood, but so they're close.
Maybe just a cracker for them today instead of the quality bird seed.
Yeah, I would say so. But anyway, one thing that I like to do for clients, one of the strategies that we've been doing for a long time at RCM or Know Your Options, I guess short time at RCM, long time at Know Your Options, whatever you want to call it. We've been selling puts on the S&P 500. And so the reason with which we do it, it's just a section of people's portfolio, and it's designed to kind of our take or our mimicking of an index such as BXY, BXM, or PUT, like what the CBOE has, as a way with which to basically just sell premium on the underlying. We have our own little take on it, and this is just our own little tweak as to what we do at certain times, and today was an example of it. Right now, I have a hard time selling out-of-the-money puts on SPY. Last year was a great year for it. I think we only had one losing month on it, and we made up the loss fairly quickly. So it was a banner year for selling puts on SPY last year, but I don't want to make that sound like we're geniuses because the market cooperated. Now, it's times like this when that's going to get a little bit challenging. So, for example, right now with SPY, let's say going into today, we were flat. We were. And SPY right now is at 150 or 150 and some change, somewhere around there when I was looking through this earlier in the day. And so when I'd like to get back into this month's or this week's set of short puts, I'd like to sell a February put, or maybe like a 4 to 6 week put, somewhere around like 142 or 143, maybe even 141, somewhere around that area. I like to get about a 5% cushion between here and the short put. Well, guess what? If I do that, I'm going to be getting like 13 cents on the short put, and it's really not going to make a whole lot of sense to do that. And that would really be an awful trade in my mind, quite frankly. So you have to roll with the punches, and you have to kind of deal with the environment with which we're in. Now, the sentiment of the strategy itself is that we're long-term bullish, short-term cautious, meaning that we believe the market is going to go up throughout time. But in the near term, we have to manage risk, and we're still trying to collect income and make this an income-based strategy with kind of a bullish tint to it. Now, there's not a lot of income to be had right there at 14 cents when we're usually looking to get like $1.50, $1.60 at those levels. So we had to make an adjustment to it, and this is an area to where we're shifting from being a degenerate premium seller to being a degenerate premium buyer. Now, does that mean we just went out and loaded up on a bunch of call options? No, not at all. This is when we shifted, and this is something that we have done in the past, to a combination.
Is this kind of like a line shift in football, Mike?
Kind of, yeah. If they're running the ball all the time and you're in your nickel defense, you're going to get pounded. So you got to bring some linebackers up to fill the runs. So we're bringing up the linebackers. We're putting the safeties back on the bench. And the way with which we're doing it for this month, what we did today is we sold a 150, 148 put spread, and we collected around just over 60 cents for it. Simultaneously, what we ended up buying was a 152 call option for February. And just different people get filled at different amounts. I haven't seen what the average is yet, but we're pretty close to even money on this trade. And the concept is that with a risk management first type of philosophy on this, which we always have, this is one where if we go down in the marketplace, we're going to lose $2 on this trade. And that's assuming we make no adjustments, and I decide just to go hang out with Sebastian for a day away from the markets, and we go out and cruise the city of Chicago.
The city of Chicago would melt, Mike.
I don't know if they could handle us together. But anyway.
We would crush it.
I don't know.
It'd be like Steve Martin and Dan Aykroyd.
It would be something. We'd be on a mission from God. But.
More Too Wild and Crazy Guys, but yeah, sure.
Okay, we'll work with that. But anyway, with that, what do we always want to look at as a trader? You want to look at how much you can possibly lose on this. Now, I have no intention of selling a 150 put because that totally takes away the whole premise of this trading philosophy, because that's how close I'd have to go right at the money to actually get the premium with which we've been accustomed to getting. However, with that, if the market goes down 5%, I have no cushion, and my clients are going to be in quite a bind. So with that, what we're going to have to do is we're actually buying upside because we're still maintaining the upward long-term bias, and then we're going to try and get upside that way. And then when we get a 20 to 30 point rally in the S&P, if indeed we get that, because no one knows for sure what's going to happen, at that point in time, we'll try to get out for a profit of $1.20 or $1.30, which is what we've gotten in the past from selling the puts. So to add up to what Seabass was saying, if you have your nickel defense in and they're running the ball, you got to put 8 in the box to stop the run. If you feel that you're not able to get premium from selling premium, there's ways to buy it without just becoming a straight up degenerate premium buyer and not getting your juice for free. And that's one to grow on.
There you go, sir. Either way, it's just degenerates. You need just embrace the degeneracy and you'll be a much happier person, I think, overall.
I keep trying.
All right, thank you for that, Uncle Mike. And now we're going to wrap up the old strategy block and dive right into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, we don't get to hear that little transition, that little beauty enough on the show. Perhaps we need to do some more mail block segments in future shows, but let's dive right in. Let's see what you, the listeners, have to say. A lot of Ford love on the old mail block today, not surprising given earnings are tomorrow. First up, we have a question from Tom S. right out of Philadelphia. He says, Ford March 14s for 40 cents, yay or nay, buy or sell? I think I'll take this one first. let you guys ponder for a bit. Yeah, but I would definitely have to lean on the selling side of that equation, particularly if they are covered. This is a good level, I think, to get in and out of Ford at these levels, particularly if you have some underlying. Riding those March 14s for 40 cents is really a no-brainer given what we've been seeing in Ford of late. It's a pretty generous level, and you can certainly trade in and around those. But I won't put words in Mike's or Alex's or Mark's mouths. I'll let them speak for themselves. Which way do you guys fall on these? Starting with you, Uncle Mike.
I say nay at this level. I wouldn't want to. I would never want to be naked a call going into earnings, and then I would not want to do a covered call at this level either. I think Ford's a little bit overbought right now, and who knows? Time will tell tomorrow with earnings, but they've had quite a rally. I would not want to be a buyer of the underlying at this point. I would wait till after earnings, which I'm going to do, and see what the market gives us after earnings.
So you would say sell the March 14s then for 40 cents.
I would say don't trade it.
Oh, that's not an option. You have to make the choice, sir. That's what he's asking us. That's why they pay us the big bucks, to make these hard decisions. I came in, I said nay, I said sell. What is your call, sir? Sell or
if
don't?
I had to do it,
sell or buy?
Sell the 14-15 call spread.
Okay. Mr. 00 hedging on your roulette wheel. 40% guarantee.
50% guarantee. Come on.
All right. Mr. Sebastian, what say you, sir?
Well, in terms of a buy-sell option opinion, the options themselves are cheap. You know, I'm looking at where vol has been prior to earnings and stuff like that over the last, fair periods of time, and it's been a lot higher into these periods. So I think, and we've seen vol break out. So if you didn't make me pick direction, I would buy the straddle before I would sell it. Now, in terms of the actual direction, I'm not sure I would. I'm not sure I'm bullish this stock at this point. I think it's had a really nice run. So I would say if you'd let me buy the straddle, I'd do that. But if I have to take the calls, I would be on the sell side.
Poor Tom. Everyone's looking to weasel out of your question there, Tom. Everyone's looking to weasel out. I gave you a straight answer, Tom. So far, I'm the only one.
Sold.
Alex, where do you fall, sir?
So obviously, I'm the one in the environment that can't really give specific recommendations on Ford.
You can just nod your head or wink. You can't really see that in the radio anyway, so it's no big deal.
Well, we'll make it easy. It's 40 cents of lottery ticket. If the listener can afford the 40-cent lottery ticket, they're 21. It's a cool play. Where can Ford go here on great earnings on a good day? Great earnings on a good day, $16, $17, something like that.
Wow.
That makes that option cheap.
Alex, arguing for the lottery tickets. Uh-oh. Interesting stuff. There you go, Tom. A diverse array of opinions, including a few weaseling options, pun intended. But yes, I think given the direction and given the levels we've seen Ford trading at recently, most of us coming down on the dark side on this one. A related question coming in from Charles C. out of Cambridge, Massachusetts. Another question about our Ford love. What do you guys think of the Ford March 12-15 bullish risk reversal for even to a nickel debit? Well, given the fact that I was not a huge fan of buying the March 14s, I think you can kind of guess where I'm going to fall on this one. I'm not a huge fan of this trade in general. Maybe, I don't know, selling the 12s doesn't really float my boat at these levels, nor does buying the 15s. So I might try to pull an Uncle Mike and say don't do it. But if I had to do it, I guess for even, it isn't the most offensive thing in the world. You're not really, to pull an Andrew Giovinazzi, you're not putting a lot of premium on the table. I still don't love Ford at the 12 level.
I don't like paying for risk reversals.
Yeah,
I won't do it.
I agree. So even it doesn't offend me as much. I still don't like the 12 level at Ford. Given, this recent rally notwithstanding, that's a substantial level for Ford, given where it's been trading of late. So I don't love this trade in any way. But I guess if I had to do it, I would prefer even to a nickel debit, I suppose.
Yeah, no, sold. I'll take the short side on that.
Yeah, that's what he's saying.
I need a credit. If I'm going to do a risk reversal, I need to get paid for it.
Yeah, exactly. He's even to a debit. You don't want to go debit, so he wants to do even. So there you go. Mr. Sebastian, not wanting to give away any free premium. I don't think any of us. Uncle Mike, I'm assuming you're not a huge fan of this trade either.
I am not, but I do want to say this though. I'll pay a nickel for a risk reversal because I think if you're making a big deal out of a nickel, you're being a perfectionist trader, and I just don't think that that's right. If you want to do if someone shows me a risk reversal for a nickel that I like, then by gosh, I'm going to pay a nickel for it because I think it's worth a nickel.
Well,
you and Andrew are going to battle to the death, sir.
Mike, you will never see a risk reversal for a nickel that you like. I promise you.
Good point. I haven't seen one yet.
Yeah.
You get what you pay for in some scenarios. All right, so there you go. Alex, I'll save you the indignity of having to respond. And that is going to do it for the mail block, and now we're going to dive right into our final segment, Around the Block.
Around the Block.
All right, and those car horns signal our final segment of the program. This is where we look at what we're watching for the next few sessions. As we said at the top of the show, Yahoo had some earnings, and as we close out the show here, they're still hovering around the 21 handle, so up a wee bit on the day. But if you were a long straddle trader, long premium trader, you might have a sad face going on tomorrow. We'll see how this opens up tomorrow, but it doesn't look like it's got too much life left in it here in the after hours. Of course, we mentioned tomorrow before the open that Ford earnings are going to come out then, so hopefully you got all your positioning done in there. Ford closing at $13.78, up about 1.5% today. Of course, hovering at the upside of that range. Got into the 14 handle for a while there last week, but for the most part, given it's been trading mostly in the 9 to 11 range over the past year, that this is definitely on the upper end of that range. So it'll be interesting to see if it can maintain these levels coming out of earnings tomorrow. Uncle Mike, what else are you watching for the rest of this week?
Ford, Facebook, and pretty much everything else. 1,500 on the SPX is something that it's definitely a key number. Curious to see what happens with that as well.
Yes, Facebook earnings are on the 30th after the close, so keep an eye on those. That'll be, of course, the day after you, the listeners, hear this. Of course, Amazon on the 29th as well, so those are coming out tomorrow after the close. So a lot of big names reporting. We talked earlier on the show about Take-Two. They are a big video game publisher. Well, their big competitor in that space, Electronic Arts, also reporting on the 30th this week as well. They closed at around $15 even, also on the upper end of their recent range. So it'll be interesting to see if that name can hold those levels as well. Mr. Sebastian, what are you watching for the rest of this week? Obviously, you'll be keeping an eye on whether the VIX can maintain this premium going forward or if it's going to slowly erode.
Yeah, I think VIX premium's interesting to watch. I just put out a comment on that. I'm watching these earnings. Amazon, to me, I think is particularly interesting. The valuation is just out of this world. And they're pricing that straddle at a lofty $23, so almost 10% the value of the stock, and it might be too cheap. So it's just shocking.
Of course, you and I have joked in the past about Apple being at the top of its range, but still, compared to Amazon, Apple is a significantly cheaper play just about any way you could possibly imagine.
I know. Well, look at the movement we've seen in Amazon in the last 2 days. So on Friday, the previous close. Or Thursday's close was 273.62. It trades up to 285 on Friday, and now it gives all that right back today to down to 276. So, we're seeing some real volatility ahead of earnings, and when you see something like that, that typically means that people aren't sure what's going on, and that we're going to see some real volatility out of earnings. And so I think you could see this trade at a significant move. I mean, we could get a $30 move out of Amazon.
There you go. Don Schlesinger, cover your ears. Mark Sebastian is talking about buying some premium there in Amazon.
Oh, no.
Uh-oh. All of our degenerate premium sellers just got deeply offended. But you're right. I mean, I'm as big an I'm as big an Amazon zealot as a lot of our listeners are Apple zealots, and yet I can't find any way to really justify these levels. This one's probably going to move substantially.
Amazon.
Yeah, I use Amazon all the time.
I think they do everything right, but these valuations are assuming, if it stopped growing, how long does where do Amazon earnings need to go to get this to like a normal PE?
Yeah, quite a bit south, and they're not sitting on $100 billion in cash as a floor like Apple is.
No. What the PE is, PE is excluding ordinary items. They're giving
3,800.
3,800.
Wow, yes, that's quite the value. So there you go. Good thing Andrew is on the show, as diehard fundamentalist that he is. That might deeply offend him.
Yeah, you need to see some real earnings. So we need to see their EPS was 7 cents a share. If that gets to like $1 a share, or if that gets to 70 cents a share, the PE will only be 380. So they're literally counting on $7 a share of earnings here at some point.
Alex, what are you watching for the week ahead, sir?
S&P 1500, keeping an eye on that level. The 10-year took out 2 today and then traded back down. I think taking out 2 will be phenomenally bullish. And then, as Mike said, it's Facebook and Ford this week. A couple other earnings coming up. Corning is coming up, but Facebook's going to be the big story this week. So that's going to be exciting because it's Thursday with weeklies going off on Friday.
All right, thank you for Alex, and unfortunately, that's all the time we have for the option block today. But before we go, I like to check in with all of my cohorts, my partners in crime on the old All-Star panel to see what they have going on in their respective necks of the woods that may interest you, dear listener. And starting off with you, Uncle Mike Tosaw, what is coming up in the land of RCM?
Quite a bit, actually. This week we had to cancel our weekly webinar just due to a family obligation from one of our speakers. But in the coming month, and not in this order, as we're rescheduling now, but in the coming month, we're going to have a webinar on oil. On February 7th, we have a webinar from Mr. Seabass himself. We're excited about having him back on the webinar train. We're also going to have a webinar on premium selling S&P E-mini options. We're excited about that. We're going to have a CTA joining us for that, and we're going to have a webinar on trading the grains. So in the coming weeks, we're going to have people on the interview block, and we're going to have a lot going on in the month of February. So stay tuned.
All right, a lot of good stuff there. Thank you for that, Uncle Mike. And next up, Mr. Sebastian. What is coming up in the land of OptionPit.com?
I don't know if you heard. I'm doing a webinar for RCM here.
That's the first I've heard of this. Tell me more about this webinar.
Yeah, it's gonna be. We don't have an official topic, I don't think, but I'm gonna do something really interesting. I promise.
An interesting webinar, topic TBD.
Exactly. I'm going to do something great, so go get registered. And, I'm just going to be on TV a bunch this week and read the blog.
There you go. You can see
www.optionpit.com/blog.
There you go. You can see Mr. Sebastian's lovely face on televisions near you. And if you can't get enough of him there, you can read his blog and all the fun stuff that he and his cohort, his life partner, Mr. Andrew Giovinazzi, write over on the blog and occasionally on Options Insider as well. And last but certainly not least, Mr. Alex, what is coming up in the land of OX?
So for folks in the New York area, the Traders Expo, February 17th through 19th, and both firms will be represented there, both OX and Schwab. February 9th, the crew is in Dallas, and that will be simulcast as a webinar. There's a robust webinar schedule. We do 1 or 2 webinars pretty much every day, every other day. February 23rd, the crew will be in Indianapolis. And an arcane piece of trivia about Indianapolis, that's where for many years the Schwab option trading desk was headquartered. But it's a town that doesn't get a lot of love. So the crew will be down there on the 23rd giving option investors a little love.
Yeah, Indianapolis was very much the mecca for options for Schwab for many years. In fact, many of the people who have become synonymous with Schwab and their options efforts, like Randy and others over there on the Schwab side of the fence, started off over there in the Indianapolis desk and have since expanded and spread their reach to other firms and other areas of the business. So thank you for that, Alex. And of course, I want to remind all of you to head on over to theoptionsinsider.com. You can, of course, lend your voice to the chorus that we heard on the mail block today. You can send us, reach out to us via Twitter, send us your comments that way. Of course, you can find us on Facebook. You can use our comment system on the site, or just shoot us an email, questions@theoptionsinsider.com. Just be sure to put the name of the show in the subject line so we know which show you're referring to. And, of course, all of us here on the Option Block All-Star panel want to thank all of you in the listening audience for downloading and streaming and subscribing and occasionally even sending in your questions and comments for us to mull over here on the old show. So thanks again for listening, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.